Hello, party people. How's everybody doing? This is a pretty shitty day for me because AYX is my biggest position. Well, my second biggest position after Activision, which is an ARB. Not a good day. Some company, I guess, with Ocular down 9%. I don't own it anymore, as you know. But I got screwed with AYX. I have a lot to talk about today. I don't even want to talk. My ear hurts. I got an ear infection a few weeks ago, and it's just coming around. So you might see me do this a lot, and it's because it's bothering me. Lots and lots and lots to talk about. Actually, before we do anything, I would like to do a little victory lap on BBIO. We'll never know whether or not I correctly read the tea leaves or not, or if it was just a coincidence. But I think now it's 7 out of 7 times they have used the word share versus discuss, and also the times when they use share, the stock went up, when they use discuss, the stock went down. Something like that, which I think would be like something like 1 in 100 by chance. Also, I don't think I did it on here, but after I went off YouTube, I analyzed all sorts of LinkedIn likes and reposts, and they were having a grand old time sharing the news that there was going to be a conference call on Monday. So I didn't make any more money on it because of that. Friday and after hours, but it was a big winner for me, and I still own it. And I still own it because I think that they are definitely going to do some sort of deal, royalty deal or something, and that's why they haven't done a secondary. So I don't know if the company gets sold or not, but I think whatever they do. I've been around 3-year-olds way too much recently. Leo's loves to say poop and calls poop faces all day long. So I still own it. It's much smaller than it was when I had it into the event, but I'm pretty bullish on BBIO, and I thought the data was fantastic. And they also have a pipeline that everybody loves. So you have like basically a perfect story here. If they get the funding from a royalty deal or a partnership, they won't need to do secondaries, and you have all these readouts and all these other indications, other drugs. Plus, this should be a $1 billion drug on its own, and it definitely could be acquired, but it might just be too hairy with all the different moving parts inside the company. You crashed that call. How about that first minute up and down $4? First minute up and down $4. Oh, you mean like right after it opened on that Monday? That was pretty painful. But I didn't sell anything, so it was okay. Anyway, that was awesome. Let's talk Ocular. First of all, I just want to be clear that I was told, and he said multiple times on multiple calls, that whichever path they take, path A or path B, will be undiluted and funded through NDA. Okay? What happened today or yesterday is not that. They're not even close to being funded through an NDA. This whole thought that this is going to be a readout in 2025 is, I think, so very unlikely. Who knows how long it's going to take to enroll this? People talk about this extremely quickly. Calling me skeptical that happens. And even if it does read out in 2025, we're talking like a 2026 decision. And they have enough money to get to Jan 1st, 2025. And it was funded through more debt. So, they are really gambling here on the future of the company. And look, they know more than we know. Okay? There's 3 different buckets they have to succeed in getting the company over the finish line here. The first bucket is they know what the bids with the partners, and they know what they have in their back pocket if they choose to take it. So that's assuming any partner wants it all for any price. If they know this, we don't know this. So that's the first thing that they know that we don't know. The second thing is they're hoping this X10's a code change happens, And if that happens, the Extend is worth a lot more, and maybe we can sell the Extend completely to fund the company. And then the third thing is they have this glaucoma readout in the first quarter of next year, and if that hits, presumably the stock would go up a bunch. They could do a secondary, or they could partner that glaucoma drug. So they have a bunch of paths to get enough cash to get this to the finish line. But you're left with a ton of questions here, okay? I'm not even sure exactly, how this trial is gonna be ran, okay? The US phase 1 trial was not treatment-naive patients. That was the Australian trial. So they're now going back to treatment-naive patients. They're not telling us whether they're gonna do a loading dose of an anti-VEGF after the TKI shot. And we don't even know how this would work in the real world should this read out positively, which it most likely would, right? It's most likely that an OTX TKI given at day 0, and then month 1, um, an anti-VEGF shot's given, and then on a control group, an anti-VEGF shot's given. And if you just follow those 2 for as long as you have to till they get rescued, and you see which one gets rescued first, that the TKI with an anti-VEGF is gonna show superiority. That's great, but how does that answer an insurer or a doctor's question about what you do once you need to rescue on the OTX TKI line? So let's say I have a rescue 5 months there, and then I have another rescue at 9 months there. At what point do I redose the TKI? And if I do redose the TKI, do I give another loading anti-VEGF shot a month later? Do we do this for the rest of their lives? The trial doesn't tell us that, and we have no idea what redosing the TKI look like or even how safe it would be because it's never been tested. So it's one thing to show that a TKI plus VEGF is superior to just VEGF. It's another thing to answer all the questions that remain about when to dose a TKI again, and what to do from a rescue perspective, on the TKI arm, um, for how long you rescue until you redose the TKI. I don't have a fucking clue, and I'm sure the company has absolutely no idea, okay? So, the FDA, notice, has not signed off on this trial. There's no SPA yet, and, that basically means that if this trial hits a specific endpoint, the FDA has agreed to approve the product. So, they're being cagey about the way the trial is designed. That's fine. They have one competitor, EyePoint, and for whatever reason, they think that, whatever the FDA told them, they're not gonna tell EyePoint. The good news here, if there is good news, is that the odds of a secondary in the next 9 months, absent really something positive happening with the stock, is very low. They took out this very expensive debt. It's over how expensive this debt is. Not just paying high interest rates, there was a, discount to the face value, I think it's called, original issue discount. There is a royalty they have to pay on Dextenza, on top of the interest rate, and then they also have to pay a large penalty if they get acquired in the next 12 months. So this was not cheap, but they didn't have anything else they could do. They couldn't do a secondary down here. I've done the math a million times on these YouTubes. It doesn't work. And I guess they thought selling Extenza outright made no sense until they see what the code changes. So, this is the path they took. It was the only path they had. I do not think they did this to then partner next month. So you shouldn't expect a partnership to happen anytime soon. Any partner would wanna design their own trial, ocular, and, they bought themselves time. They bought themselves, like I said, they have about 9 months now to and maybe they're hoping that the diabetic retinopathy trial, boom, to get the stock up to $8, and they can do a secondary, It's pretty clear that the diabetic retinopathy trial, that should work. That's just a TKI against a a sham. It's not even against the VEGF shot. So it's kinda stupid. That's not what the FDA told them they have to test, right? If true diabetic retinopathy phase 3, it would be TKI versus a VEGF, or it would be a TKI, a loading VEGF against the VEGF. And then you would see which 12 months later, whatever, what the, uh, vision is. So this trial they're running in this phase 1 diabetic retinopathy trial, I'm not sure what it's supposed to tell us. It's just gonna tell us that the TKI is active on its own versus sham. I mean, didn't the Australian trial already tell us that? It didn't tell us that in diabetic retinopathy. So, you know, that's where I am with ocular. I have no interest in owning it, no interest in rebuying. But I could definitely see the bull case in the next 6 or 9 months. You're not gonna get a secondary. You just got it completely deflated from an expectation standpoint. And, you know, if they get the code change into Extenza, if they announce that they have a special agreement with the FDA on the phase 3 trial after the launch in the next 2 months. They said they're gonna, you know, whatever they do, by the way, they initiate it. It really matters when you start dosing. Um, but, you know, if they're gonna start dosing in the next 2 months, they far along in, having an agreement with the FDA. I would like to say that I was pretty much right, that I had a reason to be concerned with Anthony, not using the language he said over and over again, which is non or minimally dilutive and funded till FDA is, and he told us over and over again they would not launch a trial without funding in place, and they are now launching a trial without the funding in place. It's as simple as that. That's it. I mean, whether or not they have other things up their sleeve in the next 6 to 9 months, you know, only they know that, but it's not in, so me being skeptical about him wanting to talk to me or reiterate it publicly was correct, and the stock went from high 7s to 4, as a result. So that's ocular. Let's talk AYX because I think this is a pretty tremendous opportunity right now, and I've got it in a pretty wrong. But AYX basically shit the bed for the second quarter in a row, and they decimated forward guidance. And we're supposed to be 23% ARR growth this year, and now they're going to do or something. Back into it, it's something like 3% quarter-over-quarter growth in Q3, and then 3% quarter-over-quarter growth in Q4, something like that. This is very because they've said over and over again. Oh, no. Is your problem? Anybody else having audio problems besides Brent? I think somebody else tell me if they're having audio problems. Anybody. Well, how the hell do I fix that? I don't know how to fix that. I don't even know where the audio is not good. Keeps cutting in and out. Shit. Hmm. Any recommendations? I don't even know where the microphone is. I don't even know where the microphone is. I'll wipe the top here. How about now? Better now? Now I have a rainbow. Frank says it sounds better. The rest of you can all fuck yourself. Thanks, Frank. So now I have a rainbow here. Professional as always. So it didn't make any sense that they would have such poor ARR growth in Q4 when they're getting all these renewals in Q4. So a few sell-siders think this is a complete reset. They are doing this so that they no longer keep missing. And, you know, true ARR growth should be north, well north even of what they to. The part that's really confusing is that if you look at the numbers they reported this quarter and last quarter, their net retention rate in the global 2000 overall is steady and growing. It's 120%, overall, but it's like 132%, 131% in the global 2000. So basically, they're getting 20 or 30% more growth on renewals, renewal co and it's not declining. So there's no sign in the numbers that this business is an ice cube or that clients aren't, um, renewing. The only thing that it's been showing the last 2 quarters, they're having a hard time getting new clients. Client growth is slowing. What's amazing about this company is that you have a founder who controls the whole vote, okay? It's a dual class thing, so there's no activists, and he owns, like, 10% of the company. It's a lot of money, okay? And in March of 2021, they put large change of controls for the whole team, and they put in huge, uh, stock-based grant that they get when it starts trading above 90. It gets some in a change of control too, but it has to be 90 for over 30 days, and they start getting some of that paid out. You also have a board member who bought $50 million in 2021, he paid like 55 or $60 a share for it. At $30, there's about 300 million or so in net debt, and there's about 80 million shares fully diluted. I'm kind of being conservative, counting severances, change of control and all. You're looking at a $2.7 billion EV right now for a company that should do close to $1 billion in ARR this year, and assuming it grows at about 15% next year, 1.15 billion next year, okay? In the last 3 or 4 private equity LBOs of similar sized software SaaS companies, the takeout ranges have been between 7 and 9 times, maybe 7 and 8 times, something like that. The last one was 7 times. It was NEWR. Before that, it was Coupa Software, COUP, and I think that also was around 7 or 7.5 times, maybe 8 times, okay? If this company was to be acquired at 5 times next year's ARR, that's $68 a share versus $30.40 today, okay? I'll repeat that. If you use a 5 times multiple of ARR versus the 7+ times multiples of the 2 most recent software LBO takeouts, you get to $68 a share. It's $30 right now, okay? This company had debt finance in March of this year. The stock was trading $65 in March of this year. The last 3 times they needed debt, they've done convertibles. This time, for the first time in their public market history, they took out 9% straight debt with no convertible option when the stock was trading at 65. If they did a convertible, they would have paid 2% coupon, and they would have had a strike in the 90s for the convertible. They decided that a $90 strike was too low to do a convertible and did straight debt. That was in March of this year. The stock trading at $30 is pricing in about 2.5 times next year's ARR. Momentive Global, MNTV, got taken out a few months ago at 3 times sales. It has 0 growth and 0 profitability. So you have to ask yourself a question. Is this business going away? Is this a dying business that artificial intelligence is going to destroy? Or is this just a case of maybe they saturated the market? They have 50% penetration in the global 2000. And, um is it just gonna be slower new growth? They have to gain seed growth from existing customers, and they're gonna have slower growth from net new customers. All the numbers point to you're not seeing it in the net retention rates. You would see that plummet if people were not renewing. So I think your margin of safety is insane at this level. I think you finally have a situation where they've set this quarter three and quarter four up to be ridiculously easy to beat. But I think what really is interesting is I think the company built, because this is now the easiest LBO in software. You pay $50 or $55 a share, and the founder rolls some of his stock in the LBO. Management gets a whole new reset in the LBO, and they get paid on the change of control. And an acquirer, a private equity firm, pays something like 4 times ARR, 4.5 times ARR, versus the 7 that NEWR just got taken out at. By just putting on a little bit of debt in this LBO, so it's not really much of a leveraged buyout, the equity returns will be insane as they grow the market over the years and show that this is not a melting ice cube. That's what I think ends up happening. And I think it could happen in the next 6 months. But I don't really see what your downside is. It's trading at 2.5 times next year's ARR. So either it would go away or the stock's gonna re-rate. So I made it huge. It's a big position. I got destroyed today on it. I bought a lot today. And I think I'm gonna wake up to a takeout. Not many tech companies doing convertibles in quarter one, though, could argue more. I don't know if I agree with that. It's much harder to raise 9% high yield debt for a company that is barely cash flow positive. And a big number too, $450 million, than it is to do a convertible with a couple percent coupon. I would think that is much more palatable in the markets, even back in March, uh, than 9% high yield debt. That's just my opinion, but maybe I'm wrong. Cost cut of 30 million seems so weird for. I think the idea is that they still have a really long pathway of growth ahead of them, and it's a tough decision to cut your way to profitability when you still feel very confident that you're a growing company. And they have to show the market that they're gonna be disciplined. So, you know, they're firing people, but they also don't wanna make it seem like they're playing defense over and over and over again. So look, where could it go? I don't know, you know? It could go to $20? Sure, it goes to $20. I just think that they're basically between a rock and a hard spot because they have so much stock-based compensation. Not It's absolute dollars that they issue. The lower the market cap goes, the more the stock compensation is gonna be a percentage, and the more dilution that's gonna happen. You know, the public markets clearly don't like this thing. They don't like the difference of the revenue versus the ARR. They are confused about what the risk is for AI. It fits everything you want in an LBO. It should be private. Uh, it's confused, and I don't know how quickly that can come together, but I'm sure they're getting internal phone calls. It just comes down to what the founder wants to do. And if I'm him, I don't know. That looks pretty good, right? 50 bucks, $5, roll half of it. Don't markets anymore, and you get to enjoy, you know, having your baby. So that's AYX. Steer has been great, though it's come down a bit. Um, I made a small much. I still have position there. And, we're waiting to see what happens when this thing opens up. I'm super excited to see what U2 does and see what the movie's gonna be. I think it's gonna be just a phenomenal success. So, I'm still very bullish on Sphere and see what they say in their earnings call in a couple weeks. Let's hope costs didn't go up again. If they did, I think that's a short-term, uh, noise, headache situation, and the market will see through that just like they did last time. QURE, has been a disaster, one of my biggest positions, and it just goes down every day. It's about $12 a share in net cash versus the 860 it's trading at. People think all the drugs in the pipeline are worthless, and they're gonna burn the cash to 0. I obviously don't think that's the case. I think that you have all sorts of optionality with the Huntington's drug. Even if they stop dosing it, you'll be able to see in a couple years if patients are doing better than historical controls. You should be able to see it pretty clearly, and even if only 10% chance of that working, that alone is worth hundreds of millions of dollars in optionality. Um, and then you have the other drugs that are entering the pipeline later this year. Inclined to agree on cost. Convert will be easier, I'm not sure, but an important point. I can't find any examples of spicy tech doing cover. Can you find any other examples of spicy tech doing a 9% junk debt deal? I mean, the debt markets were closed, like, completely. So, it's pretty remarkable they got that off. I think everybody was surprised they got that off. AVID, I think I talked about this once a few months ago, and, AVID's a big position of mine. We're very near the end there. There was a Reuters article on Thursday that said that there's at least 2 private equity firms in the hunt for AVID. They are, uh, they are, reporting earnings tomorrow, which is the last day they can do it before they be in violation. So, I would say there's a 50% chance we get our deal tomorrow. If we don't, I'm not concerned. I think the deal is definitely gonna happen, like, a 95% chance. If the process started in early May and got a Reuters article naming the 2 private equity firms by name in early August, I don't believe that there's a pricing problem between buyer and seller. I think you are just getting to the end. As far as the price goes, I think it could be anywhere between, $29 and $33. So I'm long common, and I'm long a ton of call spreads, 25, 30 call spreads, and I'm also short some 30 calls against. So I'm just hoping for a deal. A deal, 9 or higher, um, I'm happy. I could find better, examples of Thomas, Bravo overpaying for software companies. Yeah, I mean, that's the thing, right? It seems like they gotta be looking at their charts. I mean, if you could get this thing for 5 times, then the embedded returns you'll get, 3 to 5 years from now on an exit are insane, because you could exit assuming the debt markets come back, and this really does continue growing at 10 to 15+% annually, and they grow into their operating margins. I mean, the exit multiple would be high single digits, plus you get the compounding of the revenues, and you have leverage on top of it. So it's nuts. Lionsgate. Lionsgate bought E1's library and didn't tell us anything about the numbers behind it. They report tomorrow, and you'd expect them to tell you it was the greatest deal of all time. Now, I'm sure it was a good deal. There's a ton of synergies between E1 and Lionsgate. You pretty much could fire every person at E1 and just roll it into Lionsgate. I don't know how accretive it's gonna be when they had to pay, they fund it with all debt, and it's not that big of a deal. It's a, $350 million deal. So how needle moving is it gonna be? I don't think very much. I think the company is a turd sandwich. They're now gonna push out the spin until December probably or past. I continue to believe that it's very hard for them to spin Stars. The day they spin it, it's gonna trade at 1 cent. So I don't know how you spin something that is basically worthless. And I think they're just trying to buy themselves time. I don't know what they're buying themselves time for, but That is what I think is happening with Lionsgate. And I have a pretty big position that's now too, for whatever stupid reason. Magnachip had a huge quarter where it's buying back $25 million worth of stock and renewing the buyback, and I think that that's all a result of my friend Bill, who's on the board now. And look, I think the business has bottomed. You can't go lower on OLED than you're at, which is like 10 million a quarter. And on the power side, it's rebounding slowly. And you're basically looking at like $150 million a year, something like that. I can't remember what math I had. It was $160 million EV. And power alone is worth double that. You just look to see what they could have sold it for 2 or 3 years ago. It's bigger now. So, you know, I think it'll work. I don't know when it's going to work. I love that they're buying back the stock, and I was very happy with the quarter. NCR, awesome quarter. I own that still. I own call spreads in it. Um, you can't really get an LBO there until the debt markets open up years from now. Who the hell knows when? But really happy with the quarter. Very undervalued, and I was pumped to see it. Pumped to see the print. Is that pretty much everything? AMPY reports tonight. What happens there? Where oil and gas has moved to. I still own my utility stocks. They haven't done very well. AQN and AY. AQN reports this week. Part of me thinks they're gonna spin out their entire renewables, including their AY stake. Maybe they'll do a reverse mortgage trust into AY. So AY takes over all the renewables from AQN, and that way it simplifies the structure. AQN no longer owns the stake in AY. I think that's how they do that from a tax perspective. But that would be pretty interesting. Oh, Activision. Activision's 100% position. It's like, 75% common, 25% delta September, 90 and 92.50 calls. I think Activision is a done deal. I think it'll close in the next 4 weeks. It's a $3.40 spread on a $91 stock, so you're getting, like, 3.2% gross for what I think is gonna be 3 weeks' time. I think in the worst case, it closes by the end of September. We should hear a lot this week when the CMA comes out with its preliminary ruling, and, um, I love Activision. On your break, you're looking at 75 to 80, so I'm fine with it being such a big position because it's not gonna go to 50 or anything. I don't even see how it's possible that it breaks. I think the CMA is just trying to save face, and, they will come up with a solution. Microsoft will do whatever the CMA asks, whether it's the stupid cloud stuff or whatever it is, and Microsoft's gonna close on it. So, it's really just a question of timing, not a question of if, but when. They already reported their quarter, so I don't have to worry about that, and, I love Activision as an ARB. So, I don't make things 100% very often anymore. That is 100%. Any other questions? Comments? Did I forget anything? Let's see. Roivant, ROIV, I own that still. Um, we're waiting around to see if they sell this drug or not. Um, I'm very interested to see what happens there. That's a smaller position, but I'm really impressed with how they're running that company. All right. I think we're good. I would spend some time on this AYX, guys. I would look at the numbers, look at the quarterly numbers, look at the annual numbers, really focus on, the net retention rates, um, and, what's really happening under the hood, which is that their base business is doing fine. They're obviously having some hard times getting new business, and you're paying under 3 times ARR for it, which is crazy, absolutely crazy. for the quality of the business. It's like 88% gross margin. ARDX, I still really like that. I just own call spreads in it, but, you can make a really good case that ARDX is going to double in the next 12 months. You know, their current existing business is humming along in, an indication no one thought was ever gonna make any real money, and that could end up doing hundreds of millions of dollars of sales, alone. And if it gets approved in the new indication and the PDUFA date's in October, you know, that's a billion-dollar opportunity. And the key is that there is no competition really indefinitely, you know? So you have this kind of orphan drug that should grow rapidly, and you don't have to worry about anything on the horizon. Um, and because they've been selling it in irritable bowel syndrome already, they already have a nice sales ramp happening. You know, that'll be over 100 million in sales by the time, you know, they start selling it in the other indication. So, I really like ARDX. I don't own Comdex call spread, but, that to me is one of the lower risk biotech plays out there and just completely kind of forgotten about. So, the PDUFA's in October, and I cannot for the life of me see how it's possible the FDA does not approve it after that AdCom. And, you know, on a side note, I have had to take pills. I've been taking pills because I had, some, urinary issues, and I kept taking all these antibiotics, and I was taking them day after day after day for months, and some of them are big, and I was only taking 1 or 2 a day. And anybody that thinks, you know, cutting pills down from 8 to 4 a day, whatever the number is, wouldn't be a for your life, wouldn't be a quality of life, improvement, clearly has never taken horse pills every day, 'cause it sucks. And I can now have a much better understanding of why patients want this drug versus taking the, you know, the standard of care, um, uh, drug, which is, you know, tons of pills a day. Anyway, alright, let's hope the next time I speak to you guys, better news on the horizon. Take care. Bye.